And today we are continuing our journey on selling the business. But today's topic is literally talk about sell for free. So how do I sell for free? There's not many ways to sell for free, but I am giving you the concept so you actually can, comprehend in what case you can sell it for free. Let's go share our screen with you. And this is our YouTube channel. I hope you're familiar with our YouTube channel. If not, subscribe to our channel because that will give you the newest news that you can see. You can tell that last Saturday, I did how to sell your business. In that video, this is the one. In this one, what I did is I actually used company's financial statement to really give you a value of your business. You know how when we sell something, if you say you sold your business for $100,000 and you would not know, if you don't know the value of your business and you not even know whether you should be happy or you should be sad. You must have the baseline, right? You must know what is my baseline. Like when you sell a house, you know your baseline because you bought it. So you know how much you bought it. You know how much you put in renovation. So when you sell it, you have an expectation. That expectation is what we were doing on Saturday. So that is the webinar we called How to Sell Your Business. So today, what I want to do is to tell you, okay, you got your baseline. Okay, you are selling it. And, how, after you sold it, how are you going to pay less taxes or not paying tax at all, legally, properly, and not getting into gray areas? And I want to give you what professional do. And as a CPA firm, you probably wonder, Ying, you give out all your trade secret. What are you going to do? Well, I'll go on vacation if everybody know how to do taxes. So we're here to educate you. I share with you my knowledge, our firm's knowledge at the right time when you needed our help and come to us. Support us in that way. We want new clients coming to us, and we want you to realize how good we are and how smart and professional we are in this industry. All right, let's get going. So, sell business tax-free. And a couple of slides and my information. A lot of you are new. And it's just amazing that so many people are considering this option right now. And I will tell you that buying and selling business, I have a client who had done buying and selling 3-4 times already. Every time is over $2 million deals. So I am telling you, this can be a profession of someone and just build the business, sell it again. Build the business, sell it again. So there's no negativity related to selling. And selling is part of the business activity. Everything we talk about on the internet, free of charge, and we want to give you the knowledge packed in the gift format and hand over to you. Is free. And so there is no responsibility in terms of what we teach here. And you want to make sure that if you are about to make significant investment or decision for your business and you think of what we talked about on the webinar, come to Community CPA and engage us for a professional service. Don't rely on what internet says. After all, internet is what I call the entertainment side. I know I'm not entertainer. I'm just not fun at all. But I want to tell you that it is a place I know people come. That's why we're putting the knowledge out here. Doesn't mean that we're entertainers, so you don't want to take internet seriously. All right, tax-free. Tax-free means no gain in selling. If you want to get no gain, you need to have deductions lined up to know that there is no gain, right? So I put out this formula for you. You can take a picture of this slide. You need to understand this because people always get surprised about their selling. I didn't make any money. Why am I paying taxes? And I'm paying a lot of taxes. Let me tell you why. Your selling price is $1.5 million. This is just example. That's item A. Item B, Book value of assets. So you know how you have an asset on the book? You depreciate it a whole bunch, and you have a book value, which is the asset value minus depreciation. That's 900,000. You depreciate it. You already deducted those expenses in the past, 400,000. And your selling cost, you hire this expensive consultant. Man, he just charges you a lot. So that's okay. So he charges $300,000. Update for selling. So you might selling your business and the things need to be updated, and who knows, maybe interior need to be all done. That costs you 700,000. So the formula is A minus B plus C minus D minus E. If that is zero, you have it tax-free. Even though you got $1.5 million cash into your bank, you don't pay any taxes. All right? So let me say that again. So this is the formula. If you look at that 1.5 million minus 900 plus 400 minus 300 minus 700 equals to zero. That $400,000 is always a surprise to people who sell business, because you forgot you deducted those money before, so now they're coming back and wanting you to pay taxes on the selling. All right? So even if you sold it, you forgot about the 400,000, you came up to zero, you're going to pay taxes on 400,000. And by the way, that 400,000 is not a capital gain, it's an ordinary income tax. That's why you felt really expensive, because your rate on the 400,000 plus the other income you have on the W-2 and stuff is probably about 28% or 37.5%. It's going to be a huge amount. All right. So I want you to understand this is what a general formula. Of course, you may say, well, Ying, I actually had a stock, I have capital stock, that was $10,000. You didn't deduct that. The basis you have in the company, then of course that can reduce, but just really depends on how your company was set up. So in this simple example, for most of small business owners, I just want you to focus on what I tell you here. Don't get into equity side of things, because if you really get into equity side of things, you probably a business that should acquire other company, should not be the one that's selling. Okay, and I just wrote an article recently, and I will be posting that pretty soon. And in the small business world, people who sell business are mostly under 3 million. So the sales, I'm talking about the sales. So when people are doing $1 million to $3 million sales, a lot of time the business are the business owner managed business. The owner could get into the situation where it's just too tiring and too exhausting, and the family don't want this business anymore, so there's a selling inquiry goes out, so want to sell. But when you going over that 3 million threshold, a lot of times you will see a different picture for your business, and you will start thinking about acquisition, merger, and a bigger picture, not just selling. Of course, big business also sell, right? But what I am talking about is ordinary general situation we see. We have more than 10,000 clients. We have so many small businesses are here with our firm. We understand small businesses book. We know what small businesses want to do, okay? So with that said, I want you to take a look at this formula, and then let's go for more things. So I want to talk about general ways of selling business. There's no other ways of selling business other than what's on this slide right now, okay? The ownership of your company's share is one way of selling. So you just sell your shares, you sell your membership, you sell things that's related to the ownership. So this one you can do partial sale, you can do total sale. You can also roll into the sale, which is employee stock option. That's where I say you roll into the selling. You don't sell overnight. You sell slowly, and people who work for you, they're significant, so they've grown their shares with years. So with the time, they take on the ownership more and more, right? So you're selling more and more. Of course, you can also sell all or most of the asset, which comprises the business asset, including client list. So sometimes, and you heard of that, some, law firms to sell. When law firms sell, what do they sell? They really don't have a lot of asset. They rent their law firm in the high-rise building, so they have a lease. That cannot be sold. The buyer has to take it over, right? Then all they have is a client asset. And maybe some commitment from the lawyers that would stay on. So those kind of things are selling without selling the shares. They're selling the asset. So you can partial sell, you can total sell. When you sell partial, you're what? You're taking on to partners, basically, right? So those are ways to sell business. And in general, if you talk about selling, and you can sell business as a one whole piece, and you can sell business as a part of the piece. So however you cut it, and when you sell partial, and you are literally starting up a partnership. And when you sell the whole piece, then there's more story to be told. All right. So I want to talk about the rest of the few slides here. We are going to focus on selling our shares because I want folks to understand a section in IRS code is called Section 1202. Okay, and you may say that, what is Section 1202? But let's understand sale of shares. So why people sell shares? In a sale shares, the company shareholder sell the share entitlement to the buyer. So if I own a company, let's say my company has 100 shares, issued 100 shares, and I own all 100 shares. So my ownership is what? 100%, right? So, all right. So when you walk up to me, goes, Ying, I want to buy your company shares. How much you want to buy? 100%. And then you are buying the company. You're buying the 100%. So when you buy the 100%, you have all the right to the company. So all the right and responsibility attached to the ownership of the shares, such as debt, liability, are transferred to the buyer. So you hear me, right? If you buy shares or if you sell your shares to someone, you're selling that piece of liability as well. Like if you owe money, if the company owe money to a bank, then you sell the share of the company, the buyer gonna take care of the debt too. All right? So the sale has minimum impact on company's operation because you're literally just take the company and give to another person. So there's no impact. Name doesn't change. Employee doesn't change. Factory need to run the same way. So, minimum impact. And if you sell all the shares in your company, you're selling company itself, right? So with that said, of course, you cannot be sole proprietors, right? And you need to be incorporated as a company. Even the LLC, same thing. Partnership, same thing. Corporation, same thing. You sell it all, then everything is the other parties. So, but Section 1202 is specific to a kind of selling. So this provides that every company can enjoy a minimum 10 million exclusion for gain triggered by sale of a particular corporation stock. So pause for a moment, guys. The Section 1202, I want you to think about the home exclusion on capital gain. We are all familiar with that, right? If you live in the home for 5 years and you sell your home and the gain is what? The capital gain is exempted. Did you know that? So the Section 1202 is almost like the same thing, but for companies, for C corporations, for the corporation that start as a C corporation. Okay? So I just want you to kind of now, let's envisioning this 1202 is like the home, like the primary home exempted from capital gain. So certain company exempted from capital gain when they sell. Now, want to introduce to you these couple of things on the slides. It is related to Section 1202. Remember when you sell primary homes, what do they tell you? 5 years, you need to live there 5 years. And they tell you that only 500,000 gains can be exempted if you are filing jointly. And if you got more gains than that, you're going to pay capital tax, right? So there's conditions attached to that exemption. Same thing. Section 1202 has a condition attached to it. Qualified small business stock. They are everywhere. They use this abbreviation QSBS. I don't like abbreviations because English is my second language. I'm not even through with English yet, and now you give me abbreviations. I'm so lost. I don't even know what people are talking about. So I tend to spell everything out. Even if my spelling is wrong, I still gonna spell it out. So QSBS, when you look at that word, and that is the qualified small business stock. And the QB stands for QuickBook. You put 2 S's in between, and that gives you a special kind of stock that can get exemption. It's almost like that is your primary residence, right? Your rental house don't qualify for that. Only your prime residence qualify for exemption. Same thing. Only QSBS qualify for exemption. All right. Then now it talks about 5 years. They're saying that you at least hold it for 5 years. No different from our house. You have to live there for 5 years. Unless there's exemption for the house stuff. And here, QSBS has no exemptions. 5 years, okay? You need to run the business, own the stock for 5 years. And then 10 million. Remember, in the house, in the primary residence, it is 500,000 gain exemption. But here is 10 million. So that is the most you can exempt. Okay, 10 million. Now, they also, in our house deal, we say that you have to live their primary residence. So your kid's school would be registered there and, prove that to be your primary residence. So there is another requirement on here. It says that your gross asset cannot be more than 50 million. It's equal or less than 50 million. Okay, before and immediately after the issuance of the stock. So that is to say that your QSBS, your qualified small business stock, your business need to have less than $50 million in asset, in the investment. So that is the threshold. If it is more than that, you don't qualify. Okay? And the company must acquire the stock at its original issue. What does that mean? Means that you form the company, that shares need to be original share. Not when you have it a couple years later and then you transfer gift tax to your spouse, to your children. Those are not original issued. You are original issued. It need to be from get-go. All right. Now, let's look for more. And we're going to knock into QSBS concept, okay? You need to be issued by domestic C corporation. Domestic C corporation, okay? When you file tax return, that's 1120, not 1065. Not 1120S, but originally to be a C Corp. Later on, you elected to be S Corp, and that is okay. Just originally need to be C Corp. And then it also have this qualified small business stock also defines this trade or businesses. Like, saying that, okay, what businesses can enjoy that and, further define that. So there is a whole list of it. I have a next slide goes more clear for you, okay? So I want you to go to my next slides with me. So here, and we want to pause here a little bit because this QSBS thing, qualified small business stock company, right? those are company. That kind of company could be all kind of operation. Could be a restaurant, could be a CPA firm, could be a law firm. But what it says here is within this QSBS, there is a definition of QTB. It stands for Qualified Trade and Business. Okay, and this is where that exclusion comes in, saying that, well, even though this is your primary residence, and we decided that you don't qualify. So who are they? They are health, law, engineering, architecture, accounting, actuarial science, performance art, consulting, athletics, financial services, brokerage firm, or any trade or business in which the principal asset is the reputation or skill of one or more of its employees. Just digest this last sentence. So they're saying that, well, even though your assets is less than 50 million, even though you had it for 5 years, even though you are a C corporation, but because your principal asset is reputation and the skills. So like in the law firm, it's reputation, it's skills. So you don't qualify. But you're going to be sitting here goes, Ying, you just pretty much excluded everybody. Nobody qualifies. Hold on to your horses. There are people qualified. Read the last sentence. QSBS does include investment in other industries. So-called investment in other industries just means that this does include you set up a company, because when you set up a new company, it's an investment in business, right? So you set up a C Corp, and such as manufacturing, technology, research, and development, and the software. That's a lot. That is a lot. So manufacturing, and I just had a client who runs a franchise restaurant and set up a central kitchen and manufacturing food packages to deliver to all their franchise. And that qualifies because it's manufacturing. Technology. For example, someone getting into voice over IP kind of business, we have a client, voice over IP, technology. Okay, those kind of company qualifies. Research, yeah, there's a lot of research companies out of the university town, and one of our branch is in Iowa City. That's a university town, and a lot of research going on. Research company gets set up, and those companies. Development, all kind of development. Real estate development. Who didn't have one? I see quite a few clients can do that. Software. So many are doing that. Software company can qualify for this. Okay? So there is a qualified trade and business, and I know this is like something, is like a jungle, and you walk in, you're wondering whether I qualify or not. So our recommendation, there's not a lot of court cases at IRS to really set a trail for people to follow. No, there's not much. Some private letters, private rulings out there. But those private rulings, you cannot use that as a basis for your own interpretation, because that's private ruling letters. So what we recommend people to do is when you sell your business and come to professionals to get that determined. And when you set up a company, folks, come to professional to set it up. Because if you are the kind of guy and build a business and selling it 3 years later, you need to set it up right. Because wanting to do tax-free, That's not just happen by accident. Those are planned activities. Takes years. And this exemption takes 5 years, folks. Takes 5 years monitoring, planning, and you need to monitor your asset value and all of these things. So there is, we always say that you can't just expect things. You're lucky enough that you got into a place where you don't pay taxes. No such thing. Taxes is an ongoing life challenge. You just need to know that there is a will, there is a way. And this chapter is a section 1202. And if you have never heard of it, today you did. And when you start up a business, think harder whether this is something you want to accomplish in the future, and that determines how you set up your company. All right, folks, and we need to wrap up in 2 minutes. This is our contact information. Email Catherine at communitycpa.com. And we are so pleased you are here. We know that we're talking about a topic that you cares. And we hear you, and you let us know what you want to learn, and we will put on the show for you. I will talk to you again. Bye-bye, folks.